Good afternoon. Welcome to Trading the Close on this Tuesday. I'm Toni Valliere with Verified Investing. And here's what's making headlines today. The producer price index rose 0.5% in April, higher than expected. Fed Chair Jerome Powell says inflation is falling more slowly than expected, likely keeping interest rates elevated for an extended period. Google announces new additions to its AI model series, Gemini. This comes one day after OpenAI announced its newest AI model, GPT-40. Comcast will soon be offering a streaming bundle tying together Peacock, Netflix, and Apple TV at a discounted rate. New Holdings and Nextracker will announce earnings after the closing bell today. So let's get a check of where things stand just minutes before the closing bell. And we're seeing a lot of bit of green today. The Dow up 149 points, 0.38% at this time. The Nasdaq up over 120 points, 0.78%. The S&P 500 up 30 points, 0.58%. We see oil down just over $1, gold up over $20, and Bitcoin up over $1,400 at this time. So let's bring in Chief Market Strategist Gareth Soloway with a recap of today's trading. What's up with the markets today? They are up, and I didn't expect to see that.
Yeah, so the big thing today was that PPI number, which came in hotter than expected. But what wasn't as publicized is that last month's PPI was revised to a negative 0.1%. So even though this was hotter than expected at 0.5, the market's hooked on to what came out was revised last month, that it was a negative number. And so I think the market's thinking, well, if this one was 0.5, next month they'll revise this one down to like 0.3 and everything's okay. And then we had Jerome Powell coming out with a speech around 10 to 10:30 in the morning. And he basically was like, listen, we're not going to hike anymore. So the hiking's over. Yes, we have to keep interest rates higher for longer, but we're not going to be super aggressive, and we're here to kind of help, if you will. So he was very calming in addition, and I think the markets kind of took that and said, okay, the economy seems to be slowing down, even though he says that inflation's staying up and elevated. He also said that he expects it to still come in, which again, I'm not sure he wouldn't be saying anything different, but the market's just kind of, right now we're in this mode in the stock market where it's like the market just will take anything and make a positive out of it. Versus in other periods where it's like anything and they'll make a negative. It's totally all about the positives, and that just is really pushing the S&P higher here. So you can see we're basically at the highs of the day. This is the 10-minute S&P chart. We opened basically around the flat line today. There was a lot of chop early, and then you got to about 1 o'clock in the afternoon Eastern time, and it was just float higher here, and we've just floated. And we're now at a point where, the S&P is getting very, very close to the all-time highs. And here's the all-time highs. You can see I put a trend line right in there. So we're now, I think, within about 0.25% of hitting the all-time high on the S&P 500. And just a note here, we're now up 4.25% just in May for this month. And tomorrow's the halfway point. So that's a really impressive 2-week gain on the markets be up that much. I mean, if you map that out, that's an 8% plus gain for the month if it continues this way. So very rosy. The VIX, which is the fear index, is like, lows, like 52-week lows. No one's fearful anymore. Everyone thinks everything is perfect, and listen,
just peachy.
I don't see it, but I'm not the market. So
no, I know you read this differently. Can I ask you, let's go back to the beginning here with this revision. How does that all work and come about? Where does that come from?
Yeah, so I mean, the gray area, no, I mean, so from what I know is the stats are a little preliminary when they're first reported, and then the final numbers come through, and it may adjust slightly. So in this case, it must have adjusted a pretty decent amount to bring it to a negative 0.1% versus what was reported last month, which I think was a plus 0.1%. Okay. So it was a pretty decent, that's a big revision, definitely a big revision. And then again, the markets are just thinking, well, okay, well, if that one got revised, then what are they going to revise this one? The market just jumps to that next level, which again pushes us up very nicely on the day. So yeah, it was an interesting day. And you could see, by the way, the market action is, you can see it in the meme stocks, right? So everyone's so happy.
Yes.
And like, I mean,
My
I don't know.
17-year-old son is coming home talking about
There
this.
you go.
So,
There
yeah,
you go. Yep.
Yeah,
Yeah,
and
I
he
mean,
doesn't trade, so it
that's
tells
right.
you a lot, doesn't
That's right.
it?
Even Coast, I know people in the office that are now trading
Yes,
left and right.
yes.
So it's like, holy cow.
I do have FOMO. I do.
Yeah.
Trust me. I know. So GameStop, did you do any
I
trades
did.
today?
Well, GameStop, my broker didn't give me any shares to short, but AMC I was in and out multiple times, and that was even tough with my broker. Like it's hard to get shares to short on these things because they're so heavily shorted, which is part of the reason why they go up so much is because of the short squeezes going on.
Okay.
But I was nimbly able to get in and get out a few times for some good gains.
Because I woke up this morning and saw that it was up. Was it up? At
Oh
least
my
GameStop,
God.
was it up to $80 at
Yeah,
one point?
pre-market it touched like near $80 or around $80, and at one point it was down into the 40s. I mean, we're looking at the AMC chart here, but look at, I mean, this thing incredible. I mean, yesterday's move was incredible, and then to open up at $12 today, we actually so I did a couple shorts today up in this range, and I took like a dollar to the downside a few times, so that was nice. And then we actually played a long trade here. So see this low? Literally, I got filled at $5.97, which was within a couple pennies of this low today. And just to show everyone how I do my analysis, so basically, number one, it was yesterday's high, so that's going to be general support. That's a level coming in, so you basically come down to yesterday's high, which is going to be some support. This is also, if you take the low here and you take the high, it was a 618 Fibonacci retrace. All right, so you had that to go with it as well. And so there were multiple factors of why, for me at least, just as a quick, and I got out of this trade, I think I made 40 cents on it, then bounced a full dollar. But for me, it's just about taking little bits, and it adds up. That's the goal, right? So that was a cool little trading opportunity today. You know, but again, aside from that, it's just the positivity that's making these meme stocks run is the same positivity that's lifting the markets.
Exactly. No, and I see that play out. But I got to ask you, because I know some people watching are like, well, do I keep going with this? Or where do you see this going? And ultimately pulling back, right?
Well, so the first thing you have to look at is like, so there were people that literally bought here, right? So I mean, you have to remember that is that
bought.
so yeah. I mean, if it traded up there, someone was selling, but also someone had to be a buyer.
Yeah.
And so I always say to people, it's like, I mean, are you a gambler? If you're a gambler, yeah. I mean, these are the things you want to trade. If you're an investor, this is more like, you know, basically, if people are getting into this at these levels, they're trying to get rich quick, right? They're hoping for the 500% move, the 5x, the 10x. And so you just have to decide what you are. And again, no judgment on people that want to gamble. I mean, I'm all for that if you want to, but just know what you're doing. Don't go into AMC up here and be like, this is a fundamental great company and it's going to be around. You have to be honest about it, right? I mean, there's a reason why it was trading down where it was prior to this meme stock run. So I think ultimately, unless the economy stays really good, this probably slowly trickles down. And by the way, it could easily go like that tomorrow before, but eventually it trickles back down, just like it did the last time. And same thing with GameStop is that unless they reinvent themselves somehow or figure out some new way or somehow start talking AI, I mean, who knows, you know?
There you go,
you know,
exactly.
Before you know it, they'll install AI into the seats at AMC theaters and you'll be like a robot while you're watching movies, and then it'll be like a
personal
$1,000
masseuse,
stock.
maybe,
Yeah.
something like that. Now we're talking, right?
There you go. So,
okay.
yeah.
I know I'll mention some of the other market movers today. We had AMC, as you mentioned there, GameStop, Alibaba, Home Depot, Plug Power, On Holding, and PaySafe were a few of the others.
So just to touch base, so Home Depot, almost no price movement. The one takeaway is, you know, so the stock was already down going into earnings, but same thing, we did hear that the consumer is slowing down. They said that they already kind of knew that, so that's why the stock was just basically flat on the day. This is the daily chart, so this is what it did. It opened a little lower and then came back and is just literally almost flat on the day. Alibaba, we talked about this yesterday going into earnings. It had run up a bunch, and so it basically just erased this move from yesterday. This was the move from the day before close to yesterday, and then it just right back down. So a non-event there. And then, needless to say, I mean, you want to talk about we can talk about Bitcoin. Bitcoin today, it's just pulling back slightly on the chart, not much movement. But again, the biggest takeaway, so there are bullish, the chart itself is still slightly bullish, right? But what I'm struggling with is that a lot of like Ethereum is borderline breaking down, and the stock market again is having a really nice day, and Bitcoin, like, for the rally we've seen in the stock market, it concerns me a little bit that Bitcoin's not getting a bigger move up. So I just am a little on edge here over the next week or so based on the lack of upside we're seeing in Bitcoin while the stock market keeps going up and
It's
up
like
and
just
up
going
and up.
sideways.
Yes,
yeah,
and it is.
not much.
And listen, and maybe it'll play catch up. I mean, again, we talked about the inverse head and shoulders here. Oh, that was not the inverse one that I wanted to touch on. So really this pattern here, right? So, I mean, listen, it could maybe if it breaks here, it really starts to rip to the upside. But again, you do want to see, if you're a Bitcoin investor, you want to see this happening when there's meme craze like this. This is the perfect opportunity for crypto to rip higher. I know Dogecoin has upticked a little bit, Pepe, those kind of ones have upticked, but so far Bitcoin's just kind of being left out for now. And then, as I mentioned, I mean, we don't usually talk about Ethereum, but I do want to show this chart real quick. Ethereum is like literally right on the key support here. So we see this wedge pattern, this trend line goes a long way back, and you can see it's like piercing the line. It's still just holding, but if this gets below here, it actually has a bigger fall to it, which again is not the greatest thing for crypto as a whole.
Sure. Okay, and can we touch on gold, please?
Yep.
Because I've got Lobo.
Yes, which is going to be he's such a great individual, and his knowledge on commodities is incredible.
Yeah.
So at least from a technical perspective, gold remains kind of just in this sideways chop period. So you had the big bull run where we broke out above all-time highs. You then had a little correction, and now we're kind of just hugging here. And for me, again, it's just watching this trend line starting from down here through all these lows right here. And as long as, you'd rather, if you're a bull on gold, you don't want to see it break here, because then you probably come down here. I'm actually rooting for that because I want to buy more gold. I just don't want to pay up here. I'm a huge longer-term bull on gold, but so it wouldn't bother me if it wants to come back to 2,200. Awesome, I'll just pick some more up. But ultimately, if it can break the all-time high, 2,500 or higher is in the cards. And I know we got to get to Lobo real quick, but one thing, you're starting to see some of these other metals moving here. Platinum. Big day on platinum today. I have a lot of trend lines on here because I traded in my commodity service. But look at that. Look at this run just in the last couple weeks on platinum. Platinum's really taken off from like $890 to over 1,000. And so we're starting to see some of these things pick up. Some of these other metals that have been left in the dust, they're now starting to surge and play catch up. Okay,
I was going to say, is this one that people overlook sometimes?
They do. They do, because gold and silver take the center stage.
Sure.
But this one, and again, this is another one here, and this one hasn't gone yet, but I actually really like palladium here. If I could spell it correctly, that would be helpful. But there we go. But if we look at palladium, look at how this has not really picked up yet. I mean, look at the chart. I mean, these are the charts I love because they're like forgotten. And all you need is a breakout above here, and you can really get a catapult to the upside. And so, anyways, for me, these are the charts that I'm investing in versus, I'm not going long silver at $30 or $35. I'm finding the ones that haven't run yet and looking for those, because the same things apply to gold and silver. The scarcity, it's a hard asset, it's rare, so eventually if the dollars continue to be printed, eventually palladium should go up.
Real quick question, how often do you check up on this one?
Now that I have my commodity, smart money commodity, every day I go over it. In fact, we have an ETF in that service that we're holding in this as well on the long side. So yeah, I'm always watching these because there's opportunities everywhere, especially with ETFs. Like you have a stock account, you can do ETFs for commodities and all this other stuff.
Okay, something to keep in mind. Gareth, thank you so much. We always appreciate it. And remember, you can catch Gareth navigate the charts in real time every single weekday morning before the opening bell. That starts at 9 a.m. His show is called The Game Plan. You can win prizes. It airs right here on the Verified YouTube channel. My next guest, I'm so excited, is a legendary mining stock speculator, researcher, and author. He joins us now for the second time on Trading the Close. Lobo Tiggre, thank you so much for joining me today.
Glad to be back with you, Toni.
Awesome to have you. Before we get into specifics on trading, I'm curious what you make of the response today from Fed Chair Jerome Powell. Do you see us getting any rate cuts this year, or do you see more rate hikes ahead, maybe even next year?
Let's back up a couple of things. One is, it's really interesting. He had the Fed Chair pretty much say what he had to say, right? There's really no surprise there. But if you look at what he said, it was an admission that they got inflation wrong again, right? It's stickier than they thought it would be. Nobody could have seen that coming except for Peter Schiff and all the libertarians up there who said otherwise, right? So it's interesting, right? There is an admission that Team Transitory flubbed it again. I think that's quite interesting. The other thing, though, is the market action that Gareth was just outlining. There was some movement on Powell's remarks. There was some movement on the PPI. But really, the turnaround and the upsurge in the markets happened in the afternoon, long after Powell was done with his jawbone. So it seems to me, and I don't know what the answer is, Tony. I don't know why the markets decided to turn in the afternoon, but they did. I mean, it's not quarter end, it's not Friday. I don't know what happened, honestly, why that went. But Powell said what he had to say. The PPI, you had the revision versus the higher print, and that was curious too. Like the market usually doesn't pay any attention to the revisions. We get this high number, or sorry, a low number, or something that makes the government look good, and then the next month is revised upwards, but nobody pays attention to the revision, only the new number, which makes the government look good again, right? So interesting things going on. I have to say that if we get these rate cuts, it's not going to be because the Fed beat inflation. So this optimism that, we're on our way to 2%, that, nirvana of 2% somehow is going to make everything wonderful. I don't think that's it. If we get rate cuts, it's because the Fed breaks something or it remembers it's a dual mandate. And they are talking about that. I think they're kind of hedging their bets. They're talking about how their dual mandate is more in balance now, so they can start paying more attention to jobs now. And guess what? We got that surprise hot claims report last Thursday. We got, that was just a weekly one, but we got a surprise cool jobs report from the BLS before that, and that was a big surprise, and that was a monthly, much bigger report. So, signs of weakness in the labor market, that could be the beginning of the Fed breaking something. So we'll see how it goes. But I don't think everything is as fine as the powers that be want us to believe. This is an election year, of course. So who in the government is going to tell us anything other than rosy things? I wouldn't expect that at this point in time.
Well, you're not alone in feeling that way. I did ask our viewers to send us questions, and a few asked how you feel gold will do and silver and other metals if the market were to crash this year, because many people see that coming. And they also ask, when would it be a good time to invest in those precious metals?
Sure. A very common question. I have to say, dear gold bugs, I love you all, but we have a tendency, I'm a gold bug, we have a tendency to see a recession around every corner. And if not every month, then every year, certainly, there's something alarming that happens and people ask me this question, the markets are going to crash, what do we do? So two things. One is I have a free market crash survival kit that you can download on my website. It's a free report. You can go to the free report section and that's there. But the other thing is, a recession or a market downturn isn't necessarily a crash. And we could see bad news actually spark off a market rally. We could see a melt up for the very things that should cause a crash. But the Fed has trained investors to expect, the next Powell pivot or whatever you want to call it, bring the punch pull back. Bad news is good news. We've been pulling out our hair for years looking at consistently things that should be bad. Real world Main Street bad news is somehow good news on Wall Street. Well, that's because the central bank is interfering in the marketplace, and it's more about what will the Fed do than what reality is. So I get it. I understand the question. And I do think there is a chance of a market crash this year, but it's not a given. The very things that should cause it could cause a market melt up because of expectations for a Fed pivot. And not just expectations. I think the Fed would pivot. They have said, Powell has said, systemic risk would be a reason for them to change policy. A crash or a threat of that would do that. But to answer the question, I think, we've seen this repeatedly. Everybody knows this. It's not a big surprise. Everything gets whacked in a crash. If it does turn into a bona fide waterfall event, everything gets whacked, including gold and silver, the stocks as well. But that's because people get squozen by the liquidity crunch. The margin clerks are calling them saying, you got to sell something here, and they can get a bid for gold. It's brief. There's there's always a V-shaped bottom for gold in one of these waterfall events, and then it comes screaming back up again. We saw that in the flash crash of 2020. We saw it in 2008, and I think that's what we'd see this time. You know, so I would not sell gold and silver in advance of the crash of 2024 because it may not happen. I would make sure that I've got cash aplenty, you know, maybe take some extra profits here. We're looking at nominal record highs. If I've got some profits to take and I'm worried about a crash, then I'd take some of that money back off the table to make sure that I'm loaded for bear in case we do get that crash, which would of course be a tremendous buying opportunity.
Yeah. Yeah. Okay. So what commodities do you personally invest in, and how do you choose each?
Well, I'm a minerals guy, and I don't know that much about corn and cows. And every time it seems like somebody convinces me that beef is going to go up, it goes the other way. So I stick with the rocks that I have more experience with. Yeah. So right now, because I just said we don't know if we're going to get a crash, but I do think we're headed for that hard landing. Now, I think we'll see the money helicopters fly before that hard landing can do too much harm. But that being the case, I'm not willing to put my money into any industrial minerals, including the platinum and palladium Gareth was just talking about.
Oh, really?
It's not that we disagree with his thesis, right?
Okay.
The inflation is coming. You see the commodity super cycle moving. Of course, all of them are going to move. All the metals are going to move. I agree with that. But I just can't convince myself to go long if I see a hard landing coming, because history says everything gets whacked. And the industrial minerals in a recession, even without a market crash, a recession is always, always, always bad for copper, Dr. Copper. That's why they call it that, right? And all industrial minerals. And as expensive, as precious as you might say platinum and palladium are, they are industrial minerals. I love copper. After the recession, lots of copper. I like oil too, but even oil, not before I'm sure the recession has done its worst. So that limits it right now to gold, silver, and uranium. And you might say, but Lobo, uranium's an energy mineral. How come you exempt it from your call on not buying oil until we're sure the recession has done its worst? Well, that's because uranium is used for nuclear power, which is used for baseload energy. It's the kind of energy you want for your hospitals and airports, and the kind of things that you don't turn off even when you're belt tightening. You might decide not to drive to grandma's for a visit every weekend. You might make it every other weekend or something, use less gas. But you want the lights to come on in your hospitals. So I'm not saying uranium is completely immune from a major economic downturn, but it's much more resistant than other minerals. And the supply and demand fundamentals are just crazy right now. I think the current correction, and we are in a correction in uranium, I think it's a terrific opportunity for anybody who missed uranium doubling last year. So if you missed that, here's your chance.
Yeah, and I was going to ask you, are there any other assets that you feel many people overlook?
Yeah, but not until after the recession. So like oil is still hated, right? There's the stop oil now people are still out there. The industry itself is still being starved of capital. And all of this argues actually for much higher oil prices. I mean, ironically, the stop oil now people are part of a process that I think is going to take oil prices well above triple digits and will stay there until we finally do stop burning it in internal combustion engines. But that's going to take decades. And meanwhile, if you're underinvesting in providing the good that's still necessary, the price really has only one direction to go. So my concern, like I mentioned with the platinum and palladium, it's not that there's no value there, there's no upside. It's that I don't want to buy these things ahead of this recession. So it's quite simple for me. I like other things selectively after the recession. And by the way, lithium too, there's a lot of hard metal advocates. They don't like electric cars because they don't like government subsidies, right? The market should have decided, so they hate all EVs. Well, we can hate it, but it's not relevant. The fact is they're not going away. The governments are doubling down on subsidies and the bans and the incentives and so on. And it's going to take a while for hydrogen or potassium or anything else to eat lithium's lunch. So I think lithium also has upside after the recession does its worst. So I can think of other examples like that, Tony. But right now, like this year, until I'm sure that recession has done its worst, and I think that happens this summer or this fall.
Okay, that was my next question. What's the obvious sign? Can I ask you?
Yeah,
Because I don't want to
either
guess.
flat out wrong. I'm either just flat out wrong, Tony, or this happens this year. And I think we start to see the wheels come off the wagon this summer, which incidentally would work out to the average length of time that one of these long and variable lags takes between the first monetary tightening and a recession in U.S. history. That's the average time would actually put it at next month. So interesting times. Right now it's simple. Gold, silver, uranium, that's it until I'm sure the recession has done its worst.
And you think it's done its worst this summer. Is that because following that is an election? Does that have anything to do with it?
That's part of it. I think with or without the election, the money helicopters would fly. Like the powers that be have already established that if it's no fault of their own, that's a good enough reason to send people thousands of dollars in stimmy checks. And a recession is obviously no fault of the people's own. So I don't think we're going to wait to have bread lines or years of negative growth or something like that. The moment it becomes obvious that the brown stuff is hitting the fan, I think the money helicopters fly. So when I say we're headed for a hard landing, I'm not talking 1930s, unless they lose control. I think that immediately leads to an inflationary scenario. And by the way, you could argue that right now, these nominal records that we're seeing in gold, is gold signaling that coming inflation. Forward-looking markets are saying bad news is good news in that the easy money is coming. That's inflationary. We saw what happened in 2020. And so we're hedging our bets in that direction right now. That's one way of looking at what gold is telling us right now.
Lobo, I want to thank you so much for your time. Tell everyone where they can find you, where they can find that survival kit on your website, and where they can learn more about your services.
Thank you, Tony. If you go to independentspeculator.com, there's a section in the content menu to the left for free reports. There are several in there, including that market crash survival kit. And the one simple thing I'd say is just sign up for the free weekly letter. If you don't like it, you can unsubscribe anytime you want. And I can't promise whether you like it, me or my work or not, but I can promise that we won't spam you with a flood of advertisements. I hate that. You get one email per week and you see if you like my work or not.
I do like your sense of fashion. I appreciate that we're matching, not intentional. It was
color
wonderful
coordinated
having
today.
you. I would love to have you again soon. Lobo, thank you so much.
Thank you, Tony.
And that does it for us for Trading the Close on this Tuesday. We will be back tomorrow, so make it a great rest of the day.